So why is everyone talking about Tesla stock? Well, the company announced deliveries for the first quarter on April 2nd, 2023, talking about production and vehicle deliveries, and I think that's created a lot of buzz around Tesla stock. So in this video, I'm going to evaluate what these latest updates mean for Tesla stock investors and what you should look out for. So let's get into the details here. So here are the figures for the first quarter Tesla's production and deliveries broken down between the Model S and X and the Model 3 and Y. So two separate categories for the luxury higher priced models and the lower priced models. And what we see here is for the Model S and X, total production of 19,437, deliveries of only 10,695. So there's a gap between how many they produced and how many they delivered to customers, likely suggesting a slight mismatch between demand and production. So it looks like demand and production is now in line. There isn't this backlog of where customers are having to wait very long to receive the cars that they're ordering. Similarly, with the Model 3 and Y, they produced 421,371 and they delivered 412,180. Again, less deliveries than production, suggesting an increase in inventory, albeit with a gap between, there are some cars that are going to be in transit that have not yet been delivered to customers quite yet. So give a little room for that. Overall, total production of 440,808, total deliveries of 422,875. Big picture, this was lower than what Wall Street was expecting, and this was lower than what Tesla was forecasting. Looking at just the production side, this was an increase of 44.3% compared with the same quarter last year. Looking at the delivery side, this was just an increase of 36.39% from the same quarter last year. So an increase in production of 44%, increase in deliveries of 36%. Now, typically, these are excellent growth rates for a company to achieve. These are excellent growth rates to grow your sales at that rate. However, for a company like Tesla that has so much of this growth already priced into the valuation, it's a little bit troubling, and that's why you saw the stock price initially react downward following these results. When you have such high prospects already built into the stock price, when you have so many people expecting such phenomenal growth from Tesla, then any little slight underperformance is bringing the stock price down, because all those excellent prospects, all that hype, it's already priced into the stock. The stock has already achieved huge price gains in anticipation of these phenomenal things the company's going to do in the future. It's already forecasted and telegraphed and told investors what it expects to achieve in the future. And in fact, it's actually, I would argue, it's oversold investors, right? It might be achieving this much, but it tells investors it's going to do this much. And so all of this is priced in, nearly all of this is priced into the stock. So when Tesla actually achieves this much, it brings the valuation down. So for that reason, the stock price initially reacted downward. So another thing I wanted to highlight from this is look at last quarter's breakdown of last year's, I'm sorry, April 2022. The deliveries and total production. You look at production, 305,407, deliveries 310,048. So last year in the comparable quarter, Tesla delivered more than it produced, nearly 5,000 more. This year, it delivered less than it produced, nearly 18,000 less. Okay, so that's one thing to highlight here. The second thing to highlight is the higher priced models, the Model S and Model X, actually decreased in deliveries. It went from 14,724 in the same quarter last year down to 10,695 in the same quarter this year. Now, the difference is small, but for a company like Tesla that's expected to grow so much, to experience a decrease in a category is something to highlight. It's something to take notice of, especially because it's Tesla's experiencing the greatest degree of competition, in my opinion, in the higher priced models. There's more companies coming out with higher priced models than there are of lower priced models, and because it's more difficult to produce um, efficiently these lower priced models. So many of the newer car companies, you think of Rivian, you think of Lucid, you think of Polestar, they're all coming out with higher priced models because it's easier to generate positive gross profits when you're selling models at above 70, 80, $90,000. So for that reason they're focusing on that category first before they start rolling out lower price models, similar to how Tesla did early on. And so that's a bit that's a bit important to me, and starting to see, okay, so it's already experiencing a decrease in one category as a result of competition. What's going to happen to the other category when when rivals and competitors really start to ramp up production of lower priced models? Could that potentially have the same effect on Tesla's lower priced Model 3 and Model Y? I don't know. I don't know, but that's something I'm looking out for, and that's something that I'm highlighting as a risk going forward, and I'm going to monitor that every quarter now with Tesla as new models ramp up. I want to see how it's impacting Tesla's Model 3 and Model Y sales. Okay. Now, another thing I wanted to highlight. So I know I said earlier in the video that Tesla increased production by 44% and increased deliveries by 36.39%, right? So keep those figures in mind and look at Tesla's outlook for 2023. So for 2023, they're expecting to grow at about 50% compound annual growth rate. So yes, they're saying some years we might grow faster, some years we might grow slower, but for 2023, we expect to remain ahead of our long-term 50% compound annual growth rate for of around 1.8 million cars for the year. Now, this was from their shareholder letter in December of 2022. So they were forecasting 1.8 million cars for the year production. Now they're not at that pace looking at this first quarter, looking at the first quarter update. So far in the first quarter, they're not at that rate at all. So they're at 44% production and only 36.39% increase in deliveries. What that means for investors is that Tesla might bring down that guidance. They might bring down that guidance, or they might just leave that guidance up there and just fail to hit the target. Certainly, Tesla has done that a number of times where they tell investors that they're going to do something grandiose and they don't quite get there, right? They don't quite get there, or they get there a little bit later than they said, right? They said they might do something in 2020, then they actually do it like in 2023 or something like that. So, as an investor interested in Tesla stock, you have to keep that in mind, that they generally overpromise and underdeliver. That's just something to keep in mind with Tesla stock. It's not the only company that does that. Many companies, many management teams do that. It's just a way of trying to get their investor base excited about their stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. However, if Tesla does bring down this outlook for the year when it announces earnings officially, and for the first quarter of 2023, a adjustment to this forecast downward is going to be a significant hit to the stock price, a meaningful hit to the stock price. I would say between 5 to 10% downside to the stock price if Tesla brings down this target. If they don't choose to bring down this target, and then the investors get the second quarter update and Tesla is still behind in the pace to reach this goal for the year 2023, then the market will likely adjust Tesla's stock price downward anyways, between 5 and 10, maybe even 15%, because the market will realize, okay, Tesla's probably not going to hit this target, and so we need to adjust the stock price downward because the lower deliveries means lower sales, means lower profits and lower earnings, and so we're willing to pay less for the stock price if it's not going to achieve the earnings that we were expecting for 2023. So that's something to keep in mind for Tesla stock investors. And this is likely why you have so many people talking about Tesla stock, is because of this mismatch between the target for 2023 and the deliveries so far for the first quarter. All right, so thank you so much for watching. I appreciate your viewership. I've picked some videos for you that are popping up on your screen. Please click one of those and I'll see you over there.